Hello, everybody. Welcome back to the Prospero.ai stock market live streams. It's a bit of a red day here as we're beginning this stream. You know, there's a lot of these similar stocks that have been pulling back a lot, down a lot more today. We will go through some of the what once were the highest flyers to now the ones that have sold off the most here. The QQQ is down about 1.5%. SPY approaching 1% on the day. Dow Jones only down about a quarter of 1%. Russell approaching 1% as well. VIX is still at 17.42 right now, so not over 20 yet. The VIX isn't going too crazy, but we are seeing a lot of volatility today. We will get into all of it in detail when George joins me in just a bit. If you're watching live now, or even if you're watching the run back, we've been getting a lot of views after the stream is already done being live and posted as a video. So I appreciate everybody that watches them. Even if you can't catch them live, hit that like button if you're excited for the topics today. We got a bunch of great ones. I will take you guys through them right now. Welcome in, everybody. So we're going to start with George's appearance on Schwab Networks yesterday, which was right after the market closed. If you guys missed it, the link for it is in our Discord, and the link for our Discord is in the description of this video, so you can check it out through that. I see Charville's here saying hi. Hello, Charville. Welcome to the stream today. So George had a great appearance. He talked about how he was cautious on the markets because what he was seeing in the SPY and QQQ net option sentiments, which are still looking pretty bad today. We're seeing the QQQ at 3 in NOS right now and the SPY at 0. So very bearish levels overall for the SPY and the QQQ. So can't say we're too surprised with how the market has been acting today. But today has been one of the bigger days as of yet. And I did see a stat actually for bulls out there, a little bit of reprieve maybe. The SPY today is making its 4th red day in a row. It hasn't gone down 5 red days in a row for 20 months now. So it's a very rare thing to have happen. So maybe we'll get a little bit of a break tomorrow in the markets, at least a one day break from the red we've been seeing. But in any case, overall bearish right now. I want to ask George about some stocks in particular, which were once could do no wrong. They seem to be green day after day after day. NBIS, Iron, CoreWeave, a lot of the nuclear quantum stocks, SNDK, and JC. That is a question I want to ask George as well. Is it time to buy the dip? Because I feel like right now it's like, do you buy the dip in the stocks that have pulled back a ton, or do you position your portfolio for safety, maybe by the safe havens? The Magnificent Seven stocks have held up so much better. We know they have better profitability, maybe lower growth, but still growth. So how does he feel about all of this? I would imagine he would like to buy the dip because he's been mentioning LEU and ASTS a lot. So I feel like these stocks will only do well if the market keeps rallying from here. So we'll go through all that with George of whether you should buy the dip on the high flyers or position more in the safe havens. We have Mario in the chat. What's up, Mario? Good afternoon to you as well. Daily down or break even is death by 1,000 cuts. What are George's feelings about near-term movement as there has not been a day of total capitulation? I don't know. Today seems pretty close. No, Mario? With all of the red we're seeing, let's see. Let me take a look at some of these high-flying stocks. I was seeing some of them were just down like for the entire day and just melting lower and lower. So Oklo, a high flyer, down almost 9.5% now, straight down all day. NBIS down 6%, not as directly downward, but still falling a lot. Bloom Energy down over 12% today, which was another high flyer. Iron down approaching 6% on the day. ASTS, even one of our favorites, down over 9% today. So a lot of bearish moves today. Maybe today is that final day of capitulation before Santa Rally, which next Thursday I believe is Christmas. So we are getting close to those golden days that everybody always mentions every year, where the Santa Rally happens. I see the doctor is in the house, Mr. Matt. Hello. He reposted the stream on X. Thank you, appreciate that, and some more people to view the stream. Welcome. Yes, but I will ask George your question, Mario, when he gets in here. And also I wanted to bring up the NDAA, which was a defense bill that was passed, which could benefit ASTS. I think a $901 billion defense bill, and people have been mentioning how there's an Iron Dome, which ASTS could get some business for involved in this. So we'll ask George about that. Net option sentiment at 1. Oh boy, we just checked before. SPY was 0 and QQQ was 3, so maybe they updated even lower. Yeah, not looking great for the signals for SPY and QQQ at the moment. We are going to want to see them bounce at least a little bit if we're going to look for any kind of a rally in the markets or any buy the dipping going on. You know what was crazy to see with all of the downward momentum we've been getting recently? The fact that Tesla was able to hit a new all-time high this morning. Now, I did look before the stream today, and it did not look like it was holding that bounce, but it still was able to get there against all odds with how the market has been moving recently. So that's a pretty, and it's only down 4% when a lot of things are down a lot more today. So yes, it's at 470 right now. It hit a new all-time high. It got as high as 495. Probably looking to hit that psychological $500 per share price pretty soon, as long as the market is in better spirits. But I want to ask George, like, is Tesla primed to be in that NVIDIA type position where NVIDIA was looked at as the golden goose, the number one stock, the number one company for the past really like 2-3 years with the AI rally? Could Tesla position themselves as that, the number one stock that everybody looks to, with the, if we enter the next leg of an AI rally where the FSD really will probably start to expand here very soon in terms of how much business they're getting from it. And maybe the strength we've seen in the stock, where they're up almost 20% in the past month while the markets haven't done great, is an early sign that they can be that stock in the market. I'm also going to bring up the fact that George made a prediction a few streams ago. If you're a regular viewer, you might remember how he said he thinks consulting businesses are going to die. And I knew he'd like this story because I saw McKinsey consulting firm is planning to do thousands of job cuts. So maybe an early sign that his prediction is coming true. We're also going to go through Hut 8 signing a partnership with Anthropic. We were seeing stories like this. We covered the neo cloud sector. Every time one of these companies would talk about their data center plans, their partnerships, their businesses, the stocks would soar. And Hut 8 did soar this morning. It was up as much as 25%. Believe it has sold off throughout the day here, but interesting to see that that headline could still pop a stock that much, even though that whole thesis and thing that had been propelling the markets has kind of died down here. It's up 9% now, but yeah, it was up quite a bit this morning. And Hut 8 does have some Trump connections. I forget which son, if it's Eric or the other one, but one of them is on the board of something of Hut. They are connected, so I would imagine they're in a pretty good position to succeed if some momentum does come back into the market. We're going to go through Oracle, which is down today after news that Blue Owl Capital will not back a $10 billion data center that was planned to be built for OpenAI. And maybe this is really kind of the underpinnings of why we're seeing so much weakness in the market. Oracle has $248 billion in forward commitments. And what happens if, this is $10 billion, maybe they'll be able to get this one done, but say 25 billion, 50 billion. What if some of these plans aren't able to get funding? That's how the dominoes start to fall, right? And I'm pretty proud of the way we covered actually the whole market this year on these streams, because I feel like we were bringing a lot of light to the fact that the markets were a little bit frothy a few months ago when everything was running, and hopefully we saved some people some money if you were watching these streams and we were able to bring it to your attention. I felt like we were beating a dead horse for a bit there because the stocks just kept going up and the questions just kept coming through. But then I feel like the Michael Burry story where he came out and shorted Palantir and Nvidia, that kind of kicked everything off, and the rest is history since then. I have one more topic to go through on the stream today. By the way, if you have any questions throughout the stream, if you're watching about any single stocks, business, AI, tech, overall, market, macro, feel free to comment it, whether you're watching on YouTube or Twitter. We are happy to answer. We will be doing the model portfolio update at the end of the stream as well. And George has joined us. Hello, George. Welcome to the stream today. Bit of a red day here, George, but we're hanging in there. The chat is got a lot of questions for us, I think, about how to maneuver. It's a difficult market right now for a lot of people. One more topic I want to mention on the stream before we jump right into them is the correlation between household net worth and how much of their assets percent is in the stock market, and it's highly tied. You'll see once we cover it later on. Of the wealthier you are, the more assets you have invested. But we have to start here today with SPY, QQQ, NOS being 0 and 3 respectively. So just about as bearish as we have seen our net option sentiment for the overall markets. You were on Schwab Networks yesterday, and they asked you how you were feeling about the market, and you said you were pretty cautious, basically because of what we were seeing in the net option sentiments, and that's looking to be true here today. Today feels like a particularly weak day. Can you point your finger at anything particularly? And someone asked earlier, does this feel like a bit of a capitulation day to you? So could this kind of be the end of the recent weakness, or do you not foresee that with our signals?
Yeah, I mean, I don't know about that. Hold on, I just have to send out the stream to one more person. So one thing we're thinking about, I mentioned in the letter this week that we're really putting a lot of thought into like automation and how to automate. And the one thing that I'm looking at is we did get good warning on this. Like since the end of last week, net options on QQQ and SPY have been a combined 3, combined 4, and like those are the 2 lowest. And so we talk about this all the time, but we're really testing about it a lot more because some people are like, the signals have stayed good. And, often, in our favorite stocks, the signals, it's an easy exit if the signals move down. But it can be kind of hard if they stay good. But remember, something always has to be at the top of the signals. And growth names are always going to get hammered more in terms of down market. So we're really putting a lot of thought into what we can do to balance, what looks good in our signals. And then when the market signals turn, at figuring out how to adjust the portfolio. Because we've seen that before. We probably, again, this time made the mistake of hanging on for too long, but we tried to up, our short exposure a fair amount. And that's, helped us tread water a little bit. But that's a big thing that we're testing in the new year, because I think we're expecting a lot more volatility, and we need to be more on top of, okay, even if something looks good in our signals, when is there enough market risk that we, scale down the portfolio, maybe only have 1 or 2 growth names, maintain our upside, and simplify the portfolio? We want to do that in a more organized way because, I think especially in this very high volatility year, that's been our biggest issue. We haven't, even when the market signals have dictated a direction, we haven't been sensitive. We haven't moved quickly enough. We haven't reduced our growth exposure. So that's something we hope to do better with next year.
So the point you made about how always there has to be something ranking as number 1 in the signals, I could understand how this would be confusing to someone who's newer to Prospero, investing the market. So can you talk about that more in detail, about how maybe, for example, a stock like ASTS, we've mentioned a lot recently, still has overall good signals, you'd say, in Prospero, actually great, 100 upside, 93 net option sentiment, 100 social. Can you talk about how you use the SPY and QQQ net option sentiment, and why, like as they're looking so bearish right now, why that would have, ASTS, even though it looks good in the signals, able to go down, and kind of talk about your process of looking at both?
If the market's down, growth stocks are going to be hit the most, right? And growth stocks that have gone up the most are going to be hit the most, regardless of, and I think you have to separate that from the primary thing that Prospero signals are looking for is options bullishness, right? And we have seen some more conservative names like Costco, Booking do well in that option sentiment. So it's not as if we weren't completely devoid of that. But the bottom line is you're never going to see value stocks as the stocks that are most speculated in the options markets. It's just not going to happen. You're always going to get, even in down markets, you're still going to get growth stocks that are at the top of that. Those are going to be where the most bull bets are, on an ongoing basis. And it's a relative thing. Like I said, we have seen more value creep in, and we could have possibly taken that as a bigger signal. But nonetheless, that's what we really look at. We find it to be particularly, we haven't found the exact right way to do this part, but we're studying a lot more, especially from this year. But yes, when the market level signals turn, you can't just go on what looks good in the individual signals, because those are growth names, and all growth names that have gotten, that look good in the signals and everything, they're all going to get hit. Some less than others, but having good scores, because there's a lot of speculation on you in the options market for institutions, for individuals too. That doesn't make you immune from getting hit with other growth stocks if the market turns, which is why those market level things are very important. And we always talk about them.
Now, question for you. We typically look at net options and upside breakout, I would say 1 and 2, in determining how bullish a stock is looking at any given moment. When the overall net options is looking so bearish for the market, would you rank the downside metric in our signals higher, and would you look at that maybe first before anything else in an environment like this?
Yeah, I mean, I think especially the directionality, if you see downside going up, I would weigh that a lot more heavily. But to me, what I should be doing more in these situations, and I just haven't done a good enough job staying on top of the market level signals this year. But what I really should be doing is reducing the portfolio to maybe 2 or 3 longs and something like 5 shorts. So I'm not exposing myself to all this growth decline. And sometimes it's hard to be targeted with shorts. But for example, like ARM is something I saw earlier in the week, and I had a decent amount of shorts. And I actually think in retrospect that would have, obviously it's done poorly, and that just was a better counterbalance to the portfolio. So that's the other thing we're actually testing. We're looking at delta weighting our portfolio so we can be really targeted exactly what balances out the other end. Because sometimes they're not as targeted as we want them to be.
And I mentioned before you got in the stream today, I'm pretty proud of how we've covered the market, because I feel like even when everything was bullish and everything was rallying, we were highlighting some of the risks and how maybe it seemed a little bit frothy. We've discussed the AI bubble of it all for a while. I mean, the question really is now, has the bubble popped, if there was a bubble, with how much some of these stocks have declined? And I'm very curious on your opinion on this subject, because you've mentioned like LEU and ASTS as some of your favorite stocks, even going forward for next year. So I would imagine you think it's not like the bubble has popped and the whole AI rally is over, because it would have to kick off again for, I would think, for stocks like LEU and ASTS to do well. So how do you weigh out these factors of like, the bubble aspect of it, and then projecting forward of those growth stocks being some of your favorites?
No, I actually like them because I think they can do well. Like, regardless, like ASTS still has this launch. It was moved back. I think that's probably why the stock's getting hit, because it was moved back and now it's supposed to be Sunday. But if that launch goes, I expect ASTS to run, and I expect it to run even if the market is going down. And I think there's some opportunistic shorting that's taking place here. LEU, is very near like a low that it's bounced off before. So I'm going to keep watching there. It might be even below that. So I'm going to keep watching that because I think it's interesting. And it has, a lot of potential. The nuclear space has a lot of potential. So I definitely like where those are traded right now relative to the upside. But that's what I'm looking for, because I think AI stocks could go down a lot more, or they could recover. Like we could, be in a good place to buy the dip. But some of these are just so interest rate sensitive. That's what's happening with CoreWeave right now. A big thing is because they're so based on financings, like a higher interest rate environment is concerning for them.
And what's your opinion? Like, will this time period we're living through right now, like, will the history books write as it as a bubble, or do we need to see like way more decimation for that to even enter the terminology?
No, I mean, it will be called a bubble. I don't think this is it popping. I think some of the labor stuff is scary, but I just think the current administration is too interested in the stock market doing well. I think we will see something. I think we'll see Powell get terminated prematurely before we'll see anything that's called like a bubble popping.
Some of the stocks I wanted to mention, of the stocks that have pulled back the most, that were once the favorites of the market: NBIS, Iron, CoreWeave, like you said, a lot of the nuclear quantum, SNDK. Would you be, at this very moment, would you be looking to buy the dips in some of those, or would you be looking to position in more safe haven assets? On Monday, we were talking about how the overall SPY QQQ has done like so well relatively compared to a lot of these more growth companies that have pulled back a lot. That's largely due to the Mag 7. So how do you think about those two different ways of investing at the moment?
I'm very scared of like those AI hardware plays, but I think that could, kind
Yeah,
of more on the forefront. But I do think that there could be value there soon because I don't think this is a bubble popping. So I do think that presents opportunity. I never really like value stocks. Like I said, I'd rather short things, and I'm going to get even more aggressive with that. I think when I close out today, I'm going to look at the portfolio, maybe get out of one of the higher risk longs and flip to a short. But yeah, I think that I always would rather figure out stocks to go short than buying kind of value longs. Like we've talked about it before. I think I forgot what I call the half measure, but it was another stock specifically. And I was just like, yeah, if you're looking for something, I think NVIDIA, I was calling like an NVIDIA kind of a half measure. Versus like other of the frontier technologies where it's just like, no, I'd rather short the right stocks, even maybe in the same areas, and then, buy the other ones more cheaply than buy something like NVIDIA that I think will go down and then just doesn't have enough positive catalysts in my estimation.
Now, before we get into JC's question, I just want to ask you, would you categorize the Mag 7 as safe haven assets? Because I feel like typically you wouldn't, because they're like kind of growth companies, but their businesses are so beastly, so diversified, so profitable. I feel like they're kind of looked at as that by investors. So do you think in times of turmoil, people will flock to those names? Or they'll get hit too?
No, I mean, I don't know if they'll be flocked to. I think they won't get hit as hard, and I think they are safer. But that's why I advocate for shorting, because like those will go down. Those have room to go down because of their value. If the market goes down, they're also very probability driven, but people think of them as growth stocks. So yeah, I think the Mag 7 are safer because of how profitable they are, but I'd still rather short things and own kind of stocks that could rebound in a big way. That's my preferred.
JC is asking about ticker GEV and buying the dip on it, down 10% today, and still a good thesis around them around the data center power.
Let's check them out. I mean, let's see. It's at 617. It was as low as 530 on 1121. So I don't necessarily think that's kind of the value. Like, let's take a look at NBIS as a comparison. $905 was the last time, was at 63. And now it's at 75. So that's a bit closer to like value for NBIS as I look at it. But GV looks okay.
Question from Mario. George was in Wall Street, and they need to show returns every quarter. Won't they need to put their sideline funds back into the market by the first quarter?
How do you know? How do you know how much is on the sidelines? I mean, sometimes they do, sometimes they don't. Like, they don't necessarily have to put it in the stock market. Like, they could easily, if they're not confident in the stock market, they could easily put it in bonds or something else.
SoFlo was asking about ASTS, and I actually have another fact I was going to share about them anyway. The NDAA was passed by the Senate and the House. Now it's going to Trump. This is the Golden Dome defense contract of $900 billion. Do you think if Trump, or once Trump, it seems like he's going to sign this, that will be another catalyst for ASTS? People have been mentioning them as gaining some of that contract. I'm sure a very small percent of the 900 billion, but it'd still be large, even if it's 1%.
Yeah, I mean, people seem to think that was going to be a good catalyst. It didn't materialize. I'm very interested in the launch. Like, if there isn't a positive response to the launch, I'm out. Like, that's the only thing I'm watching right now.
Don't turn your backs on your ASTS crowd. I saw you're becoming a bit of a cult hero. One of the ASTS Twitter accounts reposted your Schwab appearance when you mentioned them.
There was a bunch. Yeah.
Yeah.
A bunch. I retweeted some of them. Yeah.
You're going to become the roaring kitty of ASTS.
Not a very good day for it following my wreck.
We got a question about Poet from Maverick Hoffman in the chat.
I like Poet. I think it's continued to maintain good signals. I think they have a very interesting and unique business. It's a stock I'm watching. I've been watching it to add again. I missed that big 30% day. And since then, I've been a little hesitant to get in. But I almost added it before that 30% day. So I do like it. And I think their market position is really unique and they could be huge.
Now, we haven't been, I feel like, speaking about Tesla too much recently. A lot less headlines coming out of Elon Musk in recent months and weeks. But before the sell-off today, which they got caught up in, they're down almost 4% now. They did hit a new all-time high for the first time in 363 days, so almost exactly a year. And they were as high as $495 per share in the pre-market, getting close to that 500 major psychological level. Are you surprised by the strength we've seen from Tesla stock, especially with how the market and a lot of the growthier companies have been performing recently?
We talked a little about this. It didn't end up airing on Schwab. This was the first thing that the anchor talked to me about. And what we discussed was, it's really getting priced like a robotics company now. And I think people are pretty bullish on self-driving, but I think more than anything, people are pricing this thing like they're going to make waves with the Tesla bot. And I'm hearing more and more how close robotics is. Granted, I haven't really seen that materialize. I've just heard more and more like that. Oh, it's coming. Robotics are imminent. But I mean, that's why it's priced that way. And it's something like if you can sell the story right, it works. Right. And I've seen Elon Musk say a couple times, one thing that I'm just like, come on, dude. That's a little too, I think he said something about being 10x in value of the rest of the Mag 7 or something like that. Don't direct quote me on that, but it was something outrageous. It was a few conference calls ago, and it's just it could be a huge business, but there's so many unknowns. But in a way, sometimes that could be the best thing for you to talk about and get people excited about, because it gives you a lot of time to materialize on it. And, especially if you have big believers, he can continue to be like, no, in 2 years, we're gonna be leading the way on robotics. We're gonna be, a $10 trillion company from this. And It's hard for people to prove them wrong. So that's a good thread to pull on, especially when Tesla sales aren't really blowing anyone out of the park. It makes sense.
I feel like when the market does regain momentum, there's going to need to be like that new number one, like Nvidia has been positioned in for the past 2 years of the rally. Do you think Tesla has the chance to claim that spot? And also, like, the narrative that drives the market in the next wave of momentum. I would imagine it's not going to be chips like it was the last time because, people invested for that, factored it in. A lot of the growth and future has been priced. Maybe it will be robotics or full self-driving or some of the more physical applications of AI. So how do you think about all that? And can Tesla kind of be that stock that is the stock that everybody's focused on once the market momentum returns?
I mean, you shouldn't bet against Tesla, right? I think they have a lot of excited people, a lot of loyal customers that will continue to hype their stock and buy their products. I wouldn't bet on them executing necessarily, but they certainly could have an excellent run.
So I remembered from a few streams ago you mentioning or predicting your bearish feeling on the consulting space, and I saw the story. I said, it's the first sign that George may be right. So McKinsey, a consulting firm, is plotting on cutting thousands of jobs per Bloomberg. So you mentioned that briefly when you said it on that one stream, and I was curious about a little bit more of just to hear a little bit more in detail of like why you think that space is so at risk, and if that could apply to any other areas as well.
Well, it's all like that business is the same thing as legal. It's all like marginal cost on human labor, right? And so someone like a consultant is, kind of going to be replaced by this idea of like, now it's so AI focused, so nobody wants to pay the marginal cost of human labor, right? Now everybody wants the automation, and a lot of the times it can do better than the human, right? These AIs are passing CFA level 3s, right? It's, I wrote an article on that. So yeah, it becomes tough. It not only becomes tough because human capital is less interesting, right? That's only one of the parts. It also becomes tough because when your business and profitability is formed around this surplus labor thing, like there's a lot of overhead built into a place like McKinsey from putting 10 people on a project and charging, 25, 50% more than they're paid to staff the project, right? You can't really do that for AI because AI is so cheap for you that even if you do mark it up extreme amounts, you're still far below the raw amount of profit, right? Like, let's say you pay a consultant 150K a year, right? And you charge for that person 200K a year. Let's say conservative. It's probably more than that, right? So you're making $50,000 on them in a year, right? AI, on the other hand, right? Are you paying more than, I don't know, 10, 20, maybe $50,000 to run it? So to make that same $50 instead of, 150, 10, that's like 25% markup, right? You have to do a 100% markup on 50K to make the same amount, right? And then you start to be, in the very dangerous zone of, what am I paying you for? This huge markup, maybe I could just build the AI myself. So it's tough.
And this is the worst that AI will ever be. It'll only get better. So it's crazy to think about. JC mentioned that an analyst was talking this morning, and he said if Tesla was looked at as an EV-only company, they'd be trading about $30 per share. Is that a little disingenuous to say? I feel like that's kind of crazy. You're cutting out all of their tech and innovation.
I don't think that's too crazy to say, honestly.
But is it like not reality though? I mean, they're not just an EV company at this point, I would say.
Um, no, I mean, it's kind of hard, right? They are and they aren't, right? Nobody's bought a robot yet. Like
Mm-hmm.
they do make batteries for sure, so they're more than that, but they're priced on their future. They're not priced on what they are today. I think there's a point there, but there's also some of these price targets are just so dumb, like and they are really really dumb.
Now, one story I saw come out today that I was wondering if this was maybe one of the more prescient reasons why we're seeing the market so weak right now is that Oracle was dipping after Blue Owl Capital said that they won't be backing a $10 billion data center project that was meant for OpenAI. And Oracle has about $250 billion of forward commitments in terms of building out this data center and AI infrastructure. Now, we've been talking about the domino effect of it all. This $10 billion thing, maybe they'll even be able to still proceed with somebody else. But, if you're talking about this leading to more of their future projects, which are 250 billion, getting canceled or being halted, then that affects OpenAI, which affects their commitments. And you can see how it can spiral. So do you think this
Yeah,
story is one to be watching closely to see if they're able to get another person to back that 10 billion?
absolutely. Like all of this stuff is kind of like a house of cards where, if there keeps on being these news events that inflate things that create, optimism that, retail and others are following, like um that's going to be great. But if there's more chinks in the armor, absolutely. Like I think that's what we're seeing now. The kind of pessimistic, we might be in a bubble news is really outweighing, and I think rates are a big part of that. Is really outweighing the positives and the positive catalyst news.
And what's your opinion on the probabilities of this? Like, are you pessimistic about it in the end of like actually spiraling downward, or would you say you would be a little bit more optimistic where it'll sort itself out eventually, and then you know?
Um, I think it's really hard to say. I think a lot depends on the labor markets, and I think right now it doesn't look like Powell wants to cut, but I think he will if the labor markets struggle enough, and they're looking pretty bad. 4-year high in unemployment rate recently.
Mm-hmm.
Um, I don't think that's anything, and I think that's where we were at or near all time highs. So of course, when you have that kind of concern in the market, when you're like, well, we might actually have this job problem increase, and also we're getting no guarantee that if it does, rates are going to get cut. That's a bad situation. Unless we get more clarity on a rate cut or more confidence from the job situation, we could be forming into a pretty bad sitch.
Mm-hmm. I know Trump was supposed to announce, I think, before the end of the year, so we're just 2 weeks away at the max of who the next Fed chairman is going to be. I wonder if the market keeps going down, if he announces that, and maybe the next Fed chairman even makes comments about like how much he's expected or wants to cut rates eventually, and if that can buoy the market until then.
Yeah, I don't think it really matters. I think whoever gets named, unless they come out and be like, "Hey, we're not cutting rates," I think it's going to rally. I think it's assumed that rates are going to be cut.
Oh my gosh, if the next Fed chairman got announced and then said I'm not cutting rates, I feel like the market would like crumble. I don't think
Yeah.
that's expected at all.
Well, I don't think he'd be the next Fed chairman
Yeah,
anymore
yeah.
if he said that. So yeah, I don't think. I think he made a big deal today about saying that he was going to be impartial.
He would get fired before he even held the position.
Yeah.
Um, there was a
Like, oh
stock.
yeah, like all of the impartial people we have.
There was a stock that was actually soaring this morning before the market really started selling off. It's actually interesting because I'm about to bring up Hut 8, which crypto miner, and NeoCloud. Bitcoin was very weird today. It was up like 3% at one point, and then within like 30 minutes, all sold off and in the red. But Hut was up this morning after announcing that they were partnering with Anthropic on a fluid stack data center build up to 2.3 gigawatts of AI. Um, we've seen how these headlines have caused some of these companies to soar. Iron and Wolf and what was the one you used to like also? I forget the ticker now. Cipher, I
Cypher
believe.
mining?
Yeah.
Yeah.
I was surprised that in this environment, that Hut was up 25% this morning and still up about 10% now. That it would still cause like just that headline, a company to rise like that. Is that a little bit surprising to you as well? The fact that the market is and has been so weak, but a company like that can still rally 25% just based off that headline?
Yeah, definitely.
Mm-hmm. Do you think there's any like lasting nature to these types of headlines in this environment, or are they just going to be pop and drop like it was today, essentially?
No, I think it's until we get more clarity on rates, there seems to be a lot of downward pressure on the market.
Mm-hmm. So I have one more story to go through today before we do the model portfolio at the end. Got to
Oh,
thank
one of the things that I
everybody who's
want
been
to
in.
say is I'm going to be off next week until I think Friday is the first time I can do it. So I don't know if you want to do more topics, or I guess it's 3:41. I should have told you before. You think we have enough?
We probably do not have enough. Maybe I could just rapid fire. I gotta
Yeah,
look
let's do
through.
some rapid fire.
Yeah. Let's see. What are some of them? Everybody, if you're watching now, comment what are the most popular stock you're tracking, or the stock you're most interested in at the moment. We will go through a couple of them. We'll just do like single stock coverage here and give our opinions on some of them. Here's a space we could do. We could update on Lemonade and Root, the insurance stocks that had looked good in the signals. They're dropping a lot. Any thoughts on those ones at the moment?
Yeah, I was always a little apprehensive on those. Um, but let me check. And it's just because like as kind of excited as everybody. I mean, Lemonade still looks good in the signals. Looks up today too. Yeah, Lemonade looks good. Very low net social, but what's the Root?
Yeah.
We got burned a bit on Root. But Lemonade looks like something to add. 92 upside, 84 in option sentiment. I get nervous about those stocks when, credit is so extended. But, Lemonade is in a growing market. It's an easy product. I use the product. So, yeah, I think Lemonade is definitely a stock to watch, and one that the Prospero signals like and have liked on an ongoing basis.
Mm-hmm. You've mentioned a lot throughout the stream of like how important rates are at the moment and them remaining high. Is there any stocks or sectors that aren't as rate centered that could survive better if rates do remain high?
I think healthcare stocks, they were kind of beat up the most. And I think people might look for value in healthcare stocks. I think utilities to a certain extent, but I think healthcare more. And I do think when there was more like trade concerns, I think consumer cyclical was a bigger worry. And rates rates not being cut is still not the great for consumer cyclical, but I'm seeing a lot more strength there. I mean, that's something where I would look for growth in popular consumer cyclicals over tech. If we kind of see the struggles, like the rate uncertainty at the very least, if not actual problems, continue.
Do you think the stocks that have strong recurring revenue or user bases like the Spotify or Netflix of the world, will they do well? Or are you getting concerned that the consumer is getting a little tight and might cancel some of those memberships that they have?
Those aren't my favorite. I do think Netflix, especially with acquisition, could be very, very interesting. But I like a company like AppLovin. That's one of the reasons we talk about it as like a safer pick. Their return on ad spend is just very, they beat Meta by about 40% and the rest of the providers by about 75. They do really well in efficiency metrics. And that's why I like them, because I think even if there's a struggle, like same with ASTS or LU, even if there's a struggle, I could see them doing very well just because they produce revenue, they have good efficiency metrics. That's a way I think to balance value and growth. And AppLovin does have like a 76 profitability and a 76 growth, with which a combined score that's as good as you get.
Mm-hmm. HSYDF is in the chat, but Maverick, I do not see it in Prospero, so I think we'll move on to SoFi, which is also being asked about.
I don't see SoFi, but let's do it.
This guy is asking about SoFi.
Oh, I missed that one. SoFi, like, I continue to see it as like I'd be interesting that 62 net option sentiment, not good enough, and it's heading down. I don't like it. Not at that net option sentiment. That makes me very nervous, actually.
Interesting. What about NVS for shorting it? Actually, JC is asking.
Looks like a good short, actually. A very good short. I'd look into it more. Let's see like where it is in terms of pricing. Could be a short I pursue. Yeah.
Interesting. Hitting like a 52-week high.
Yeah. I like NVS as a short.
We have one more question, probably our last one here we'll do. Thoughts on Amazon at the moment from David.
Yeah, I should add that NVS looks bad in our signals. And then, good trend on an option sentiment at 13, high downside. And then also, it looks near its all-time high. So that's very, I like that a lot. Amazon, I don't love. Let me look at its signals. I was looking at its chart. Amazon, I don't love, but I do 83 in option sentiment, 82 upside, 86 social. It's pretty good. It's got a pretty good trend in an options. I always think the challenge with Amazon is like so much of its growth is priced in. But Amazon looks okay. I don't think it's a bad buy right now.
Mm-hmm. Well, I think that's going to end our rapid fire, but that was good. We got a bunch of topics covered there. We'll do a switch over. Catch you on the other side.
Mm-hmm.
All right, everybody, stick with me. George will be right back in the stream. We will be doing the model portfolio update where we make live adds and drops to the portfolio. Thank you all for watching so far today. I hope you enjoyed the topics. We'll do another look at the SPY and QQQ net option sentiment. Let's see how the markets have been moving throughout the stream, though. It looks like they are just slowly drifting lower still. The QQQ is down over 1.5% here. No bounces so far. SPY and Russell are down about 1%. Dow Jones approaching 0.5% on the day. So no bounces throughout the stream today, really, for the overall indexes. Let's take a look at the QQQ and SPY. QQQ is at 2 in net option sentiment now, and SPY is at 0. So now no bounces in those as well. Yikes. Yes, we've been pinned at 0 for the SPY for a few days now, since December 12th about. So it's looking pretty bearish at the moment. Good call out, JC, in finding NVS, if anybody's just joining. Stock looking very bearish in the signals. George liked it a lot. Mario said, so when is the next meeting? Sounds like it's next Friday, which would be December 28th. I believe, or no, what is next Friday? December 26th, I believe. So probably no live streams until then. My work is cut out for me for editing some clips through them, but we shall prevail. But yeah, it sounds like next Friday, Mario. George is back.
Next.
Here we go.
Yeah, that sounds good. All right.
You are welcome, Mario. By the way, everybody who's watching on YouTube, the links are in our chat right now for the investing newsletter, the trading newsletter. If you haven't checked them out, click on those, check them out.
What's QQQ and SPY at?
QQQ is at 2 and SPY is at 0.
Wow, QQQ's creeping down there. SPY used to be a lot lower. Okay. Oh, am I sharing my screen? No, right.
Not yet.
What is that model portfolio update live thing? I don't think I've ever seen that.
Matt texted me one time and he said he tuned in during this and he could see how other people would be confused. So now we have a little banner of what's going on the stream.
Could definitely be confusing.
Looks like it's time to move swiftly away from growth. The stock market's getting coal for Christmas.
No Santa rally.
Energy continues to look like the best bull opportunity. And I missed the rest. And tech the best short.
And check the bear. Come on. Why are you doing this? Can you tell me the net option sentiment on AKRO?
AKRO is currently at 64, and it has a very bullish looking time series graph here.
Okay. Oh, damn. That's not what we want.
Actually, I just dug because I realized the price was so steady. I was like, what's going on? AKRO was merged with Novo Nordisk.
Was what?
It merged with Novo Nordisk.
That's funny. Okay. All right, that works. Let's just take a quick look here.
Bless you.
Short. Ramp. Okay. And then, when did we finish this? Yeah, we did. MSN. What's going on with TYLESE? Um, okay. Let's send this. Okay, that's done. And I think we're all done.
We're all done. And it sounds like we won't be back till after the holidays. So everybody,
Yes.
hopefully the
Have a
market
Merry
is
Christmas,
Merry
everyone.
Christmas. Hopefully the market is green before then, and we'll be back just after to be back on the live stream. But thank you, George. Thank you, everybody, for viewing. Hopefully you had a great stream, and we'll see you all again very soon.
Okay.
Bye, everybody.
Thank you. All right.